So are you now thoroughly confused about the housing market with mortgage interest rates going up and down and banks collapsing and everywhere you look on the news, you just hear doom and gloom? Well, I'm going to try and clarify it for you right now. I am Nick with the Iannitti Group. Just want to come at you with a real quick market update for the month of March. Okay. So obviously the responsibility of a leader is to define reality. That's what I'm going to try and do, right? Because we're not headed for any type of market crash condition. We do know that obviously as rates go up, the buyer demand comes down, and that's just strictly due to an affordability situation, right? We also know that the 30-year mortgage rate typically has followed the 10-year treasury yield for years and years and years, okay? The problem is right now, that the economy is showing signs of resilience, mainly due to consumer spending, rates are increasing, overall housing costs are also increasing and therefore impacting inflation, which continues to persist, right? This is from Sam Counter, chief economist over at Freddie Mac. Realize that, as we see inflation, housing is tied right into that, right? It's a cost of goods, just like any other consumer product that you're going to buy, okay? The problem is right now with what we're seeing is, this is again the 30-year mortgage rate following the 10-year treasury yield. When you look at this all the way back to like 1972, the average spread's about 1.72, okay? Right now, the average spread's about 2.75, right? So there's an extra point in there. And that's basically directly due to all of the economic uncertainty that we have right now, okay? The recent collapse of a couple of banks does not help that situation either. But the bigger challenge is still our inventory, right? I've been talking about this for years. If you watch my videos, 6 months of inventory is a healthy, balanced market. Anything below really, 4 months of inventory is a seller's market. Anything above 6 months is really a buyer's market, right? So what we're looking at though is really we're seeing a shortage of things coming back to the market, okay? And this is essentially the pandemic here pretty much. You really got to compare things post-pandemic to pre-pandemic, right? When we look at pre-pandemic, where our listings are at right now, they're not anywhere near close to where they were, okay? In fact, while we look at, this is basically from Realtor.com, number of home sales, have been increasing. They're still 47% lower than it was before the pandemic, right? So remember, I've talked about a lot of this, kind of pandemic bounce. We've seen that with credit card spending, all these other things where people say, oh my God, things are doubling. We've seen it with mortgage foreclosures, things are doubling, yeah, from last year, right? But when you look at them before the pandemic, they're nowhere near what they were historically. So we need to keep that in mind, okay? As far as changing inventory, obviously inventory is down everywhere with the exception of Hawaii, okay? And that's basically due in part to this right here, right? Post-pandemic. Remember, the National Home Builders Association tracked new home starts all the way back to the 1960s. And what they found is every decade we built about 10 million homes. So on average, about 1 million homes a year from basically 2008 all the way up to 2019. We only built about 4.8 million homes. Okay, so about a little over 5 million home shortage than we did previous decades, and we're still feeling those effects. These are a bunch of different people, and they're talking about how many homes we have of a deficit right now. I still think it's right around that 5 million. Kind of, I'm up there with Realtor.com. Okay, but just realize this was basically the drops in home values since June through the end of last year, right? So really wasn't that bad, but it still leads the question, right? I'm talking to more and more people every single day and saying, God, should I buy a home right now? The rates are so incredibly high. Prices have come down in some areas, but they haven't in other areas, depending on what's going on with, school district and desirability of the location. But I would just tell you this too, right? We know that median rents have been going through the roof, right? They're still continuing to climb, right? If this is the alternative, if you're paying rent, you're essentially shoving money out the window. It still absolutely is in your favor to be buying right now, right? When we look at basically, this is the home price expectation survey looking over the next few years, they're definitely anticipating that, the housing market, even though we're in a little bit of a slump right now, or kind of a little stagnating, so to speak, they're definitely calling for things to increase, right? So if you're going to try and wait it out, it's probably not a good idea. This is probably the best time to get into the house while we have a little bit of more negotiating power from a buyer's standpoint, okay? And also keep this in mind. This is basically from Q1 1991 to Q4 the end of last year. Look at the percentage of change of prices of homes over that 30-year period. You're talking about, 300% in California, right? 428% in Florida. You've got other places, Utah, Colorado, they're over 500%. Okay. So absolutely, it's going to pay to remain inside the housing market. Okay. This is just same kind of graphic just over the past 5 years, but still you can see significant gains pretty much everywhere. Okay. Also keep this in mind. This is again also from the home price expectation survey. They're basically saying with those numbers, with where they see the median prices going, the average homeowner stands to make about $54,000 over the next 5 years. Okay, so you definitely don't want to miss out on that. This is latest from the Adam data. 48% of mortgage residential properties in the United States were considered equity rich in the fourth quarter, right? That means they basically have more than 50% equity over their estimated market value. This is the same thing too. If you're a seller right now and you're thinking about, God, is this a good time to sell? I don't know. We understand that there's an issue with the mortgage rate. You're like, I'm at, 2.75%. I don't necessarily want to sell and then take on a mortgage at 5.75%. We understand that. But part of it also is you need to understand how much equity you're actually sitting on right now, because this might be an actual really good time to put that equity to better use, especially if your current home is no longer suiting your needs. Okay. This was just a core logic study here, basically showing, average equity gains in US with mortgages. This is towards the end of last year or whatever. So this is basically what you really need to focus on, is how much you're actually up in your house and if that's actually going to help you or not. The mortgage component is a tricky thing, but if you are still renting, looking to buy, you absolutely still want to try and get into this market. So anyway, if you have questions about, hey, what's going on in my market? What is my home worth? How much equity am I actually sitting on? I'm more than happy to have that conversation with you. Just reach out, and that's it. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.